for now. Thank you very much for joining in. We've got another market expert joining in, Vinit Sambre, the head of Equities at DSP Investment Managers, joining us on the show now. Vinit, good morning, and thank you very much for joining in. Over the last 3 months, we've seen a pretty strong stealth rally. The Nifty Sensex up close to about 10%. The mid and the small cap indices are up 17-18%. What are the pockets that you are comfortable buying at current levels? Because valuations are far more expensive compared to what they were 3 months ago. And secondly, this big inflow by retail investors into small caps, is that something which is continuing even now in the month of June?
Good morning and thank you for having me on the show. So I think you're right. There has been quite a bit of optimism as far as the overall broader market is concerned, and especially the small and mid cap space, which has seen very smart up move. But before I speak about the segments or sectors which we are sort of looking at right now, I think as we understand that as the markets keep going up, as the frenzy keeps increasing, one has to be cautious around the valuations, because that actually brings down the set of opportunities one has in terms of investing into. So I think that is point number one. Point number two is that when I generally look at within the small cap space, when I look at the last 1 month quality of companies sort of performing well, I think there is some bit of deterioration which is happening in terms of the quality. People are moving towards or diluting quality. So I think that is something which one needs to be careful about when we see such a smart up move. And to your point, I think which are the segments which are still looking okay. I think I will sort of continue with my thought process around the fact that over the next maybe 2 or 3 quarters or so, one may look at margin expansion, given the fact that across few categories which we are watching in a way. And this is on the back of moderating raw material prices and other costs. So from that perspective, I think what becomes important are some of the companies within healthcare, materials, auto ancillary. These are some pockets which are looking, let's say, reasonable, even after some bit of the momentum which is caught up. Beyond that, I would say that companies within the broader consumption basket or IT baskets are the ones which maybe over the next 1 or 2 quarters, there could be likely improvement in the performance, and that's where one should start looking at those categories as well.
Vinit, hi, good morning. Thanks for joining us. You own Supreme Industries. It's one of your top holdings. Stock's done well. I mean, it started late, but I think it's caught up now, up some 30% for the year so far. Is there a sort of broader reflection on the view on the building materials space? Consumer exposure as well. Just talk us through, I mean, not the stock, but, what your view is.
Yeah, I think, as far as the plastic pipes business is concerned, it actually spans across various categories, so to say, and it actually touches most parts of your economy, be it agri, be it building material, like you said. Specifically as far as Supreme Industries is concerned, they also sort of, serve industrials and other consumer, as a category as far as their customers are concerned. So we see that after the last 2 years of underperformance, as far as the plastic pipes business is concerned, there is a normalization. The agri demand is also looking up. I think, as far as the agri income is concerned, with the rising MSPs and farmers before, if the rains are not good, they would like to sort of.
Okay, I think we lost the line there with Vinit. We'll just kind of fix that and go back to him. So I'll just wait to be told. Well, you got 50 points on the Nifty, by the way, so things are looking up. So we're at the high point of the day, so let me just put it that way. The high was made at 18,886. It was made at 18,721. And we are at the high point with this 56-odd point gain that we have on our hands. Vinit is back with us. Vinit, go on.
So what I was trying to say is that after 2 years of impact in terms of the volumes growth, I think we are looking at improved performance across various segments, be it agri, building materials also is sort of doing well overall. So I would say, and company has been sort of guiding, when one looks at their commentary or their annual report, I think they have been guiding at good growth. So I would say this is one company which we believe should do well, and which is what is sort of reflected in terms of our portfolio exposure as well.
All right. Hi, Vinit. Good morning. Vinit, what about ITC? That's been the star of the last 18 months. I think there were too many memes on it. The stock decided to perform. It's still part of your value fund. How much of value is still left? Do you think that it still has a long runaway from here on, or do you think bulk of that is already done?
See, I think again, it's all relative in a way, and as far as some of these, so to say, non-ESG businesses were concerned, I think they were sort of getting avoided at some point. But I think the company has also seen good change as far as the business across various businesses are concerned, and I think that is what is getting reflected in terms of the performance. When one compares in terms of the relative basis, I think relatively the valuations are still okay. So I don't know about how one should think about incremental investments, but I think we continue to hold on to our investment as far as this company is concerned.
What about incremental investments in its competitors like HUL or a Godrej Consumer or a Dabur or a Tata Consumer? Would you look at investing in other consumer names? Because inflation is coming down, margins have potential to improve, and plus they have underperformed ITC, at least in the last 1 month, across the board.
See, I think it makes sense to sort of start evaluating some of these consumer names, while we all know that in terms of valuations, we have not seen correction to the extent one would have expected, given the kind of growth challenges these companies were witnessing. But nonetheless, like you mentioned, I think what is going to happen is as some of the cost benefits start improving their profitability, or they start passing on the benefits of these costs to improvise their volumes, I think that should mean that these consumer-oriented companies should start seeing some sort of relative better performance is my judgment, and which is what I said in the initial remark, that over the next 1 or 2 quarters, maybe it is good to sort of keep evaluating names where the companies will benefit because of the margin expansion. So I think that is one of the core strategies which we are sort of also thinking about.
Vinit, at the end of March, the kind of mood in the broader markets was absolutely dismal. Now that's turned around quickly. In terms of flows, how has it changed? Earlier, the allocation to mid and small caps, was it lower relative to the large caps? Then it appears that allocation would have gone up. And at current reckoning, how does it work? Large cap flows to mid cap flows, or mid cap flows to large caps? I mean, how much has it moved up? And how do you think it will pan out from here on?
So, Nigel, unfortunately, what we've seen is that the investors' behavior is generally pro-cyclical, which means that whenever things are performing, in hindsight, it starts looking more incrementally more better, and hence we start seeing more flows. But I would like to sort of also put in a word of caution here, that as far as investors are concerned, they should try and have a right asset allocation strategy and a discipline of reallocating whenever they see frenzy and outperformance of a specific category as such. Not that I want to discourage investments in small and mid-cap space. I'm generally bullish on this category with a long-term view. But sentiments around the investors, they don't sort of sustain with that sort of a timelines in mind. So I would say that the mood is good today. Flows are taking place more specifically in the small-cap space. But I think with the next few years perspective, as the broader market or the broader economy benefits, I think these companies will also see good benefit. But as I said, I think one needs to be cautious and one needs to have a good asset allocation strategy in place.
Okay, thank you very much, Vinit, for joining in. Have a good day, a good week as well.